Notes Radio. This is John Ransom, John Bam Ransom, hanging out with you, powered by Town Hall Finance and RansomNotes.tv, joined as we always are by David Williams with Williams Edge. And so, David, you know, as long as I've known you, I don't know that it's coincidental, but the market's been pretty volatile. But for you, that's kind of the name of the game, isn't it?
Yeah, good morning, John, and thank you for having me on. The name of the game is volatility because those movements can be used to make very, hopefully, astute calls on where the markets are going to be, where they're going to go, and to allow us to put trades on and have our clients get into those. And we think of them more as investments. Even though they're short-term investments, John, we think of them as short-term investments rather than trading. I've never really liked the term trading because it sounds like you're giving some and you're taking some back and you're giving some. You're trading back and forth. I'm looking to, and I think most people are, looking to invest in these markets with the actual goal of having more money at the end rather than just trading back and forth. We want to grow the account over time.
Certainly, and that's kind of sometimes a novel concept when it comes to trading. But this isn't day trading. I mean, that kind of gets a rap. I think deservedly so. But you are taking advantage of really major movements in the market mostly.
We really are. I do want to say that some of the trades, or investments that we make actually do complete in the same day that we make them. It's just a happy coincidence that it does, and sometimes we forecast that to happen. But a large portion of what we're doing in the markets really generally is a usually 2 to 3 day movement in the market where we can really pick up some nice gains for our clients, and our clients pick them up. And occasionally, like I said, we'll get the intraday movements partially as well. But we certainly don't come to the market with the idea of making $100 or making a few ticks or something like that. I don't think that's a winner's game, if you will. I think the winner's game is to have a very high probability of a very specific thing happening and only acting when you have that. And John, that's, as you know, that's what we give our clients. We give our clients very highly specific information about the movements in the market that we believe are just about to happen so that they can take advantage of that and literally trade like a pro because they're letting a pro put the probabilities in their favor.
Well, and that's really what I want to emphasize is the fact that you're not just this isn't random guesswork. There's an actual science behind what it is that you're doing. Yes, some of it is just your some of it is just your experience that you picked up along the way, but there are specific reasons why you say the market is going to do certain things at a certain time.
That is right, and it is very much like what you said. It's more like a science than anything else. It would be difficult for people to believe if I told them what we believe the truth about the markets are. It probably would seem pretty outside the ordinary realm of what academics and other people have written about the markets. But we believe that there are forces at work in the market that can be forecast in advance, and we display that. And we do have a webinar, actually, John, right after our time with you on your program today, where your listeners can come to that webinar and check out what we're doing.
Okay, great. And where can they find information about that specifically?
They can go to our website at PageTrader, PageTrader.com, PageTrader, and there's a link. If they go down, there's a calendar on the home page. If they'll just click on that link, they can come into that room where myself and another Page Trader, very experienced trader, is going to be with me there today. We're going to talk a little bit and show some of the things that are really possible to do with these markets and give people maybe a new vision for what they can do to produce and participate in these types of what we believe are very high probability market investments.
You know, one of the great calls that you made while I have known you is back in 2014, you were talking about the fact that the Treasury market was going to rally through that, and most people thought, certainly at the beginning of the year, that the market was going to go down because they forecast the Fed to raise interest rates.
Yes.
We're kind of in a similar predicament right now. What is your long-term view now of the Treasury market?
We currently don't have have a longer-term forecast right at this moment. We could have one at any one point, but if I can, just for 30 seconds, I'd like to just tell your listeners that on your program and on other programs, in 2014, we forecast the biblical decline. We forecast that there was going to be a biblical decline in the crude oil market that began either in May or June. The decline actually began in July. The market was at $97 during the month of July, and it has now dropped 60 full handles or 60 full points. We made that forecast on live radio many, many times leading into June. We also forecast the bottom of the real estate crash, although this is not a market that you watch on your screen,
Sure.
back in late 2010, and we did that on live radio for a year, and the market certainly has rebounded very nicely. We've made some other very long-term forecasts for the market, and I hope to be able to do that for your listeners when they come to the webinar or maybe become a client of ours, so they can see the value of having a very, very high probability of a very specific thing happening in the market and then taking advantage of that.
Okay. Now, David, one of the things that you mentioned is that you don't have a long-term opinion on the Treasury market, and
Right now.
I want to point out the reason why you don't is not because you don't feel right. It's because the data is telling you that. You have mentioned this before. This is kind of like when you see somebody in the morning, and it's the same person coming to you, he's going to say good day or hello or however he usually greets you, and the market acts in a similar fashion. That
is correct. We actually know very little except general information for most of the time, and then at very specific points in time, we know a whole lot, very lot, about a very specific thing that's about to happen. And so we apply that across all these different markets, and I think we're going to find, or your listeners will find if they come check out what we're doing, that it is remarkable what you can know in advance. Very specific things what you can know in advance about these individual markets. And we do have, of course, clientele all over the world that's taking advantage of this day in and day out. I'm very happy to be on your program to let more people know so they can see that there's a lot more you can do with these markets than you might have thought, rather than just generalizing or getting hot tips or something like that. Hey, David, I appreciate you coming on. Tomorrow I want to talk a little bit about the square principle, in part because very impressed with the work that you're doing on that, and because the markets, with this type of volatility, these big swings going either way in the market, I think it's a great opportunity for folks to make money. Folks, go to pagetrader.com. That's pagetrader.com, or you can give them a call at, what's the 800 number? They can call us, John, at 888, toll-free, 231 4702, 888-231-4702. Hey, I appreciate it, David. We'll check in with you tomorrow. Thanks so much. Great, John. Nice to chat with you. All right. Well, I think that's it, and I'd like to say hi to everyone who has come over to our webinar today just to check in with us. Most of you are here probably because you know us already, and that's fine. Couple things I'd like to do is just say a few things. Number one, I have Jerry Fagnant from PageTrader with us today. And Jerry, are you online with us right now?
I am, David.
All right, very good. Well, nice to have you here with us. One of the main things that I want to get across to people, especially new people, and I realize that some of the people in the webinar today have been around before, but a couple things I think are really important. I cannot stop being enthusiastic about the markets and the possibilities the markets have because I know there is a science to their movement. I know there is something that they have to do, even if it's not absolutely perfect. I know that we can take advantage of that, and that means that there's a real reason to be looking at them other than simply gambling. And I think we all know, or if we don't, I would like you to say a few things about this, Jerry, too, because we've all been through it. But for me, the difference between gambling and forecasting in the markets and trading in the markets is that you gamble when you place a bet, and I hate to use the term bet with what we're doing, but for lack of a better term, when you gamble, you're placing a bet when you know in advance that the odds are likely against you. And so that's a gamble. That's what you do in a casino. The odds are definitively against you, and for certain moments in time they may not be, but overall they are. In investing and doing it by a very scientific method, which is the way that we approach it, you're actually waiting for the periods of time where the odds are very high in your favor, that the probabilities are in your favor. That's a very different kind of thing. That's investing as opposed to gambling. Jerry, you may want to say a few things about that, because we all go through this. People, we've all been through it on both sides, and maybe you have a few things you can add.
Yeah, no, I mean, you do. You hate to use the word or the gambling analogy because it's so 180 degrees from what we do here. But to stick with that for a second, you say all the time that we are eliminating the least likely thing that the market can do, and therefore narrowing it down to the highest probability thing that the market must do at a given point in time. And the gambling analogy would be, I'm sitting here at the blackjack table, I'm looking for an ace, and I've got every other card turned upside down. I can see them all face up, and the dealer's only holding 2 cards. I mean, I can see what my probabilities are for getting the card that I need because we've eliminated all the other possibilities.
That's correct. Go ahead. Finish up.
No, I was just going to say, when you can do that and you can eliminate all the other things that the market could do, and through your process of elimination and your work that you've done with your principles, you eliminate those things, you boil it down to that high probability trade. That's an investment.
That's right. It becomes an investment at that point, as opposed to merely gambling or hoping or intuition or whatever else people use to trade. And I have found for myself, I would like to think of myself as somebody who's very intuitive and in line with things, but the facts don't back that up, quite honestly. I have found that the best trading or investing that I do is based entirely on these principles, and the worst that I do is usually based on an emotional feeling about something. The markets do have a very subtle way, a kind of second-level communication that they're sending you when you're watching markets, that most of us are unaware, that our minds are being slowly sold an idea that we later say, boy, I really got this one right, and it's emotional rather than scientific, and before you know it, we're in a trade where the market's going the wrong way. With the backdrop of the square principle, Jerry, the roadmap principle, the reflected wave, with all of that in front of us, we can indeed put together an investment or a trade that definitely we've done the exclusionary work, we've taken out the least likely things to happen, and we're left with the most likely movement, and that is what the business that we're in is. And that's what we give to our clients. I'd like to thank everyone today for coming. These are short little webinars where we cover a short little topic, but we'll be on John Ransom every day. If you have a few minutes, you can come by and say hi to us. I want to also introduce Jerry Fagnan to everyone, because he's been with Page Trader for 8 years. He's traded with us. He's been trading for 30 years. He's run his own funds. He's had his own financial services company. He really knows the art and act of trading very well, and is being very helpful to our clients who are putting this stuff to work. So delighted to have you on with us, Jerry. We'll be back tomorrow with John Ransom, and we'll have another go at it at that time. Hope to see you here on Friday. If you have a few minutes, stop by. Thanks again, everyone. See you next time.